Tom Lee is calling for a nearly 10% move in the S&P 500 before the year end. The safest way to take advantage of this is to buy S&P 500 ETFs. For those who want to take more risk and want to pick AI-related stocks that you have strong conviction about, now is the time to start doing your research to see if you can find some good ones out there. Now, before we get into it, let's check out this quick video from Tom Lee explaining his reason why.
It's really a catch-up. We had 7,700 at the start of the year, but the S&P 2027 earnings was 350. We're now at 400. We're applying a lower multiple to get to 8,000.
When you say we're at 400, that's you?
Yeah, that's the fund strat earnings. It's consensus is about the same, 352 or so. And we're putting
Consensus is 352 and you're 400?
I'm sorry, was 352 and it's now 398. So
Okay.
it's about in line with consensus. But the PE multiple we're applying at the end of this year is 20 times, and that gets us 8,000.
And we get there by earnings, not an expanding multiple.
That's right. The multiple, I think, arguably should expand because we've had so many black swans, and yet the equal weight PE is lower today than it was 5 years ago.
What gets us there? Because, I mean, the market feels like it's fighting for something internally. We're having this rotation away from the mega caps, as I was just discussing with Dan Ives. Like, what's going on here?
Well, I think by the end of this year, we're facing a lot of turmoil in the near term because we have inflation, and today's PCE is telling us maybe the level of inflation's peaked, but it's still pretty high. We've got the war and the shortages it's going to create, and we of course have the Fed, and the market's going to test the new Fed, especially his new policies, and we have the lockup expiration of these massive IPOs. So I think there's a lot for the market to digest, but by the end of the year, we're going to be looking at 2027, where a lot of this is anniversaried in. And I do think that's going to be the start of one of the biggest rallies of our lifetime.
Oh, wow.
Now let's take a look at this article from Barron about Micron. The article is titled, Micron is breaking the shackles of history and why the stock could still double from here. Review Micron's print as further evidence that the memory industry is undergoing a transformative shift towards long-term supply agreement which support demand insurance through cycle profitability and mitigated cyclicality. Micron spent this year getting customer into a 3 to 5 year take or pay supply contracts with high price floors and selling within cash deposits. It already has 16 of those agreements covering a range of customer sizes. Once all executed, these favorable contracts will constitute to about 40% of Micron's revenue, and the company hopes to raise that percentage. Micron has great pricing power and it will continue to make money. I mean, this stock went from 100 billion to like $1 trillion in like 4 months. So 2 trillion is probably next for sure. I started a stock community for you guys. The link is below. Don't forget to like and subscribe to the channel, and see you next time.